This meeting is being recorded.
Good evening, everybody. Excuse me. Welcome. My name is Keto Pilak. I work for Keep Growing Detroit, and I coordinate our education programming, amongst other things. I'm super happy to have you out tonight with us. We are going to be discussing the paper trail, so talking about accounting related to small businesses, and we have our longtime Garden Resource Program member and friend of Keep Growing Detroit and local accountant, Miss Yvonne Willis, is going to be our speaker this evening, and she can talk a little bit about her background. But I know that she's got years of experience, and she's going to be sharing some good information with us tonight. So if we could give a warm welcome for Miss Yvonne. And I hear all the clapping coming out, and I'll hand the
Thank you
mic over to
guys.
you. Hand the mic over to
Thank you
you, Ms.
guys.
Yvonne. Um, so why don't I let's see. I'm gonna pin you, and then when you're ready, if you want to just if you want to speak at all, and let me know when you're ready to jump on the slides, and I'll go switch over to the slides.
Okay. Hi everyone. Yes, my formal name is Yvonne, but I like Vaughn. So most of you guys may know me by Vaughn. But basically, I just wanted to share some information with you guys. I've been an accountant for many years, and always have been in a position where I like to share it with others, because accounting is not one of those subjects that people, or the subjects or jobs or careers that people kind of like. Either you like it or you don't like it. But as we have our farms and everything, it's very, very beneficial just to kind of know those basics of accounting. And that's what I would like to share with you guys. In terms of my work background, I have been an accountant, um, uh, for, like I said, many years in a nonprofit setting. But the good thing about accounting, though, is that the basic accounting is for a profit, nonprofit, for home, for whatever. And when I say for home, that's one of the things I want to kind of share with you guys. When we talk about accounting, if you can kind of just think about how you um, kind of pay your bills or financially run your home and whatnot, I think people will understand a little bit what's going on behind the scenes as far as accounting. So if Keto, if you can go ahead and put the first screen up, or the first page
Yeah,
of the presentation.
will do.
And if there's any questions or whatnot, I like for this setting to be very interactive. So when you have a question, let's see if we can kind of address it when that thought comes up and kind of go from there. That's basically my email address and my phone number in case you guys want to contact me.
All right. Oh, hold on.
Next page. Okay. So counting is simply, it's simple from my standpoint, again, because I've had it for years, but it can be challenging. I'm just going to be upfront with it. But if you kind of stick with some basics that we're going to go over today, I think it'll kind of make life a little bit easier for you. So we're going to look at recording documents, reporting things. When we talk about interpreting, yes, that's kind of like on a higher level, but I can share with you some keys, some pointers for that too. And then when we talk about analyzing and everything. So basically, when you see a finance report, it should basically tell the fiscal or the financial story of your business. It should not be your business. And I say that only because of the fact that if you kind of get caught up with the numbers and whatnot, you want to stay focused on your numbers, but you don't want to get caught up for achieving your dream. I believe in one achieving their dream, whether it be on a nonprofit level or on a profit making level. So again, accounting is just that representing that financial data for your company. So if we move to the next screen, so of course, when we take a look at our numbers, it'll let us know whether or not we're making a profit. It'll definitely let us know if we're losing money. If you have multiple services or multiple goods, it could tell you which ones are your money makers, which ones you may need to kind of like maybe not invest in any longer. So it'll help you make decisions, whether it be on, do you want to just have your labor? Do you want to bring on other people to help you out? Can you afford it? So those are the things. So it's a good planning tool if you're kind of thinking of it in that way. Now, as our farms or gardens or our, I understand that some of you that may be on the call who may help out with assembling things for your farms. So eventually you're going to get to a point where you are going to have to report that income to the IRS because it is income. IRS kind of want their money any way they can get the money. Let's just be real with this. But in terms of the taxation, that's going to be in another class. So we're not going to go over that today. Now, some of us have an opportunity to apply for grants. So usually sometimes when you apply for grants, your potential funder is going to want to know, okay, what did you do last year? How well have you done? Have you been in business for a year or two or whatever? They're going to want to see your records. Now, they're not going to want to see every single document, but it's usually some forms that they take a look at. That's the balance sheet, the income statement. Those are the two basic ones. You may even apply for a loan. And I guarantee that when you apply for a loan, they're going to really want to take a look at your financial reports. And then again, as you get more involved with your business, you may be subject to audit. So you'll need to have an auditor on board. And it's just good to have this information so you can have the basic information where it's only for you. But then, like I said, others are going to need to look at it as your business grows, as you scale up and everything. So it's good for you to know where you're at any point in time. So next screen, please. So a couple of tips that I think is really important, and this is, I think, and this is what the industry says, that a lot of people make a mistake where they keep their business records with their personal records. That's a big no-no. So you always want to keep those separate. I strongly suggest that you even have a separate bank account. You have a separate cash app. You have a separate, if it's PayPal or it's the Venmo, keep that separate. You're going to have your personal one. That's fine and dandy. But like I said, for your company, keep that separate. When you're keeping your records, it'll definitely help because you won't have to be scratching your head at a later going, oh, wow, what was this for? What was this for? So definitely keep everything separate. And then when you keep these records separate, you're definitely going to reconcile them. We'll get into that a little bit more. And yes, just a separate note here that if you have an LLC, that was in last week's session. If you kind of keep track of your personal and your business together, you're subject to maybe losing your personal liability protection. So that's another reason to keep them separate. So you may be wondering now, when do I record my transactions? So you want to record your transactions as they occur. So you may want to just schedule that time. And as you make plans to make purchases or make sales or whatnot, always incorporate some time to kind of make sure you record what happened. And so when we say record, it can actually be something as simple as leaving a note on your phone, or you can keep you old fashioned, you keep you a folder where you keep your paperwork or notebook or something like that. Not a personal notebook. I mean, not a computer notebook, but yeah, you can just have pencil and paper and keep track of your activity. Any questions at this point by chance? Or let me just ask this question. Have you guys been using some of these things already? You guys tell me a little bit where you at in terms of your record keeping. I'm going to just stop it at this point. Any comments or anything you want to share? Do we have anything?
I just was checking the chat. Nothing in the chat yet. You're welcome to drop
Hey,
questions in the
Vaughn.
Oh, go ahead.
Hey, Vaughn. I've been using Zoho to keep up with the information.
You've been using Go what?
Zoho.
Zoho? Oh, okay. Okay.
So,
Is it
I
working well for you?
yeah, it itemizes it out and it breaks it down pretty well. So, I mean,
Okay. Okay.
that was I was using before I was able to get a business account established.
Okay. Okay. So
Oh,
Zoho, is that the ZOHO?
Yes, ma'am.
Okay. I'm not familiar with that, but I worked with some larger computerized systems and whatnot, but I am going to keep a note of that because I want to take a look at that. There are quite a few different applications that are available, and we'll, like I said, that's later on in our presentation and everything. But yeah.
I had a quick question, Vaughn. So
Mhm.
you said you're talking about keeping things separate. So like if you're an LLC, do you have to like do you have to have a business account, or can it be you just have I'm not remembering exactly like how this would work with the LLC, but like can you just have a separate account that is just for business, or does it need to be kind of in the business's name, or does it?
Well, it doesn't, I mean, as you grow larger, you might want to, put on the business name. But I think the key thing that I would like to say initially is just have it a separate account. Like for
Okay.
example, for for a business that I have, I even have like a separate charge card. So anytime I want to charge, I only use that charge card for the business.
But it just
So
says
things like
it
that, you
just
can
says
just keep
Von Willis on that card though, right? It doesn't say,
yeah.
okay,
It's
right on.
still in my name, right?
Right.
Right.
Okay.
But just
Right
for
on.
purposes of keeping my records and stuff.
Right.
Yeah, good question.
Okay.
Okay. Next slide. Okay, so this is really getting down to the nitty gritty where we talk about keeping our records. And we talk about the different transactions that we may have. In accounting, there's basically 5 different groups of accounts, 5 broad categories. One is revenue, one is your expenses. So we all know that revenue minus expenses, we always want to have a surplus. So that's a positive thing. That's what we are in business for. The next set of categories are assets. That's a plus. Those are things that are good for your company. Those are things like cash, your equipment. These are things that your company owns. Then the 4th category is liabilities. This is what you owe to somebody else. Yes, you typically want that number to be small because we don't want any debt. And then your 5th category is equity. That's basically your ownership. Okay. So in accounting, there's this equation that's so important. And that equation, maybe you guys have heard of it, is assets equal liability plus equity. And let me kind of just break that down, that I'm hoping that'll help us all know how that works. So as far as a new company, we know that we're going to need some cash. So cash will represent the assets. And let's just say that's $100. And then we're going to put the equal sign. So you kind of just visualize this. Then you're going to say, okay, do I owe anything to anyone? But let's just say out of that cash of 100, we borrowed some money. We borrowed $80. Okay. And then the remaining 20, that was money that we put in. So in that equation, that basic equation, our assets, total assets is 100, which equals what we owe out in liability of 80 plus $20 that we put in. That assets equal liability plus equity should always balance. And that's why sometimes when you see accountants or county, it has that scale because that's what that's representing. So then when you take a look at your revenue and expenses, That's going to change the scenario with your assets and liabilities. We'll get into that a little bit, but I do want you guys to understand that basic, the A equal L plus E, and kind of go from there. Now, of course, we know that within these 5 broad categories, there could be smaller things or subcategories that's involved. Because like, for example, there's different types of revenue. So depending on your company, you may want to have different, what we call line items representing those different types of services or goods. You might want to keep track of your tomato plants separate from your fruit vegetables. So you may want to keep your fruit separate from your vegetables. And then you even maybe want to say, okay, this is what I earned from my collard greens, or from my greens, this is what I got from my beans. So how detailed you want that to be, you determine how you want to do that. You might want to start off broad initially, and then as you get the habit, get the swing of it, start breaking things down a little bit more deeper. Expenses are the same way. You might want to keep track of your compost expenses versus your, let's see, let me think of another, then your seedlings. You might want to keep track of that separate rather than just having a broad category of expenses. Okay. So then when we talk about assets, there's like, on this particular level, I would say there's like two or three broad categories where you're going to have your cash. You may have a little bit for your equipment, and then you may have some for your supplies. So it's basically your cash, and then you're going to say your fixed assets. And then we might have like prepaid insurance. Again, I like to get some feedback from you guys to let me know where you at in this whole process. Then we talk about the 4th category, that's your liability. I had mentioned a charge card. So that will be what's called accounts payable. That's what we have to pay at a later date. It could be a short-term payable versus a long-term. Long-term is anything over a year. And let's say, for instance, you bought a tractor and you got a loan for it, and it's like 2 or 3 years. That's what we consider a long-term liability. And then that 5th category usually is only going to be your equity. If you have multiple owners in your business, maybe you have a separate equity account for each person. So there is some varieties, but what it is though, you want to make your accounts reflective of what you need and what you're going to go have. And that's basically what represents your chart of accounts, which is that 2nd bullet on this screen. Keto, can you go to the next slide?
Yeah, there's a question.
Sure, okay.
So in regards to the equity component, is the revenue included in the asset when you do the calculation? Or is it the asset separate, it's left separate?
Okay, so the revenue and expenses go on the income statement. The first 2 on this page, the last 3 go on your balance sheet. So what happens is that if you do have a situation where you made a little bit of money, that's going to increase your equity. So that's how that will increase. It will increase.
Okay.
So in this scenario, where I said the 100 equal 80 plus 20, you guys remember that one? Okay. So let's say, for example, you had a profit of $10. So what happens is that it's now going to be 110 equal 80 plus 30.
I got it.
Because that 10 is going to be your profit.
Okay. I got it. Thank you.
That helps out? Okay.
Yeah.
Good question. Want to go to the next screen, Keto, if we don't have any?
Yep.
Okay. So this is just talking about the different categories that I mentioned. Revenue, the ticket sales, market sale. It could be even in grants or your CSA memberships. Okay. Your expenses, labor, contractors, mileage. Now, you know what? I like to always include, because I think it's so important, is water. We cannot exclude that component of this our whole firm. And then we talk about assets. We talked about equipment, property. There's another one that's called accounts receivable. We'll talk about that a little later. And then equity, that's with the owners, whether it be the sole owner, a partnership, or multiple owners. So like I said, you want to define your chart of account related to your activity. Like for example, if I would had a company helping out with assembling the high tunnels, I would have probably a high labor expense. I may have mileage, I may have contractors and labor, but I may not have garden supplies or seeds. I may have rental, maybe I rented some tools or whatnot. So again, your chart of account is gonna correspond to the services or the goods that you sell. Next slide or question. Okay, so when we talk about the different transactions that could happen for a firm or a person helping out with firms. So the first line item is produce sales revenue. Okay, that's basically income. The first 5 are income, just some transactions we kind of just came up with. And then most of the other ones are expense categories. Now, one that's a little different is the accounts receivable. So I'll talk about that right now. So you may run into a situation where, well, I do think that most of our situations when we sell things, we basically get our cash, our payment from the person or company or store. We usually get that right away for the most part. There are going to be times, especially as we grow, that someone is going to say, oh, okay, just bill that to my account. And you're going to say, oh, okay, I'll do that. And when you do that, depending on you guys' agreement, you may send them an invoice, or it may just be an agreement, a verbal agreement. But we all know that sometimes verbal agreements are not good. So we need to follow up with the invoice maybe. And so we do have some samples of that. But let me just elaborate a little bit more on this accounts receivable. So what happens is that you didn't get your cash. Normally when you make a sale, you get your cash and then you recognize the revenue. You're like, okay, I sold $100 worth of produce. I got my cash, they paid. And then my transaction is going to be revenue. Very, very simple, okay? But like I said, there's going to be occasions where someone may say, well, I can't pay you right now. I'll pay you at a later date. And so what happens is that you don't have that cash. You have what's called an accounts receivable. Now you do have a revenue part of it, but like I said, we're introducing this new account that's called accounts receivable. Now, there's some pluses and minuses to pros and cons with accounts receivable. We all know that sometimes we get caught up in situations where, for whatever reason, the person, how could I put it delicately? They don't pay. I'm gonna just be raw with it. And so what happens is that revenue you thought you're gonna have, you don't have. So that's a sticky situation, because that's a situation where you extended credit to someone else. So there's basically no sale. If you recorded revenue, you got to take that revenue off the books and you have to make some changes. But we're going to think that this is a good world. So therefore, when that person does pay, that accounts receivable changes into cash and there's a transaction that's recorded for that. Keto, can I take a break for just 1 second?
Yeah.
Did you get, or if T is on the line, do we still have that Google spreadsheet? Did she give you that Google spreadsheet?
I believe so. Let me.
We could take a look at that right now.
Well, let me. Okay.
And it'll just
That was the
further.
link. Yeah. Let me. Hold on one sec. Let me.
Okay. It's the one that had the transactions.
Okay.
And it's a really good spreadsheet that kind of emphasized this area right here.
Yeah, and Keto, you can share that into the chat if you can, so people can use that.
This one?
Yes.
No.
Yep.
Okay.
That link will ask them to make the copy. Yeah.
Oh, okay. Okay. So this is it. Okay.
So I'm going to stop share for a second so I can throw it in the chat, because for some reason the chat's not bouncing to the top.
Make sure you use that link that was in the PowerPoint, because that way it'll have them open up a copy instead of everybody editing that one Google Doc.
Okay, got it. Yes, good point. Because I'm glad you said that. Because okay, got it.
Yeah.
All right, and I'm getting there. And here, this is it. And then I'm going to go back there. Go here. And then I'm going to add it to the chat. Almost there, guys.
Thank you, Keto.
Yvonne, I have another question. So with the loss that had happened for the person that didn't pay you the money back, or the people that didn't pay you the money back, can you make that a line item for loss and be able to like account for that when you file your taxes?
It would just be a reduction of income. And when we see this screen, I think it'll kind of picture it, because if you, let's see. Yeah, because you temporarily put revenue on the books when you extend credit. And like I said, if they don't pay, you take that temporary revenue is now zero. So you have to take it, it's a deduction.
Okay, thank you.
Now, when you really get going and whatnot, when you talk about the taxes and stuff, there's something that's called like a allowance for bad debts. And so I don't think we're at that point right now, but like I said, as we grow larger, you may know, okay, about 10% of your customers are not going to pay. So you set up this allowance, and then that's what reduces your revenue also. But the key thing to remember, though, is that if they don't pay, that reduces your revenue. Okay, so if we get to, so are we at the transactions? So is this the Google spreadsheet?
Yes.
Okay.
Oh, wait.
So,
there it is. There
okay.
it is.
Right. Thank you. Okay. So this is a Google spreadsheet that T was able to find, and I do like it. So if we take a look at these entries, so the first one we're saying that we sold that down at the Eastern market, we made $250. Then the next one is that we sold some eggs to Tina. And then we had some expenses, compost. We sold at the Northwest Farmers Market, 200. We got a grant for 300 from the church. Then bingo, the last one. We sold on credit to a local restaurant, accounts receivable of $20. So what this particular spreadsheet will do, it will basically show you how to put this information into your income statement. So Keto, if you want to click on that spreadsheet at the bottom, income statement.
Yeah, hold on one sec.
Okay.
Come on.
That mouse acting up.
Yeah, I was trying to move the faces, everybody's faces, so I can. Oh, which one do you want?
The third one, income statement.
Okay.
So those 5 or 6 transactions, it kind of populated into this spreadsheet. So there was one that said the produce from the revenue sales, that was $450. There were some eggs for 12, and then there was a grant of $300. So $762 for revenue. And then can you scroll down? Okay, and then the garden supplies. But there was something else that's missing. Can you go back to transactions for me? Okay, this is what I want to show. I'm sorry, guys, I forgot to mention this. So over to the right column, it says the category. So that talked about the different things. And then when we said the produce sale on credit to the local restaurant, that's why we put on their accounts receivable. That's where that comes in. Because like I said, it's not, we didn't get our money, so it's not revenue right now.
And I'm just making I want to make a note here. This is the first time I'm getting a chance to look at this, which is great. But if you under the categories, when you add something new, you can hit this drop down and then you already got your categories already populated. So you can, based on the chart of accounts.
Right.
Right.
So you want to go to the chart of accounts spreadsheet. And for this particular make-believe company, this is what was set up as the chart of accounts. And then I think you guys are going to have access to this. So you basically just modify this to suit your needs.
Great.
And so if we take a look.
I'm sorry, Yvonne, if you could just show people, if you're not familiar with Google Docs, just how to add in, like, say, if you hover over the line 19 and add a column on top, that way it'll pull in that that additional line, that additional category into that drop down menu and the other one. So they're all talking to each other, like you said, Keto. So if you could show people where you can add a row. So if you right click and add a row on top of there. So it says insert row above. Then you could add a different line item in there and just say, maybe you want to track collard green sales, or new shoes. Okay. Or is that an asset for you, Keto?
That's my asset. Yeah.
Okay, so if you click out of there, then go ahead and click out of the box. Right now you're still in assets, but take your cursor off of that box and then go to your chart of accounts. Yeah, take your cursor off of that box. Okay. If you go on chart of accounts, your shoes now should be in the drop down box.
There it is. Okay.
Cool. And then also what you'll need to do is go over to the income statement. And you'll need to actually add it in the income statement also if you want to track that line item. So you'll do the same on here, and you'll click on the 27 line and add a line on top of it. You don't want to add it under it because then it's going to go out of range for the spreadsheet. So always just go ahead and add it within that range, and add your shoes there. And if you were to put a transaction there, it'll show up on the income statement. Also, you'll carry the equation down. So say click right there on taxes paid, and the next box over, that'd be D26. Drag that down so the equation from that box carries, and then you'll have a full thing. And then you'll also want to, if you scroll up a little bit, Keto, you'll add in the month, the range, the date range, and it'll automatically calculate your income statement for you. I just wanted to share that little piece.
Oh, that's all great. Yep, that's all a great narrative. Thank you.
So this is I think a very good template to use to get you started. And even if you may keep one that's manually, kind of just put your data in here, and because it should match up and everything until you get a comfort level. But I think it's really nice. And so if we go back to transactions, if you could, Keto, because I think it's some very important information on the right side of that screen in that upper right-hand column. So it's saying that you want to enter the transaction one under the other. You always want to put your date in, okay? And then you want to use your most appropriate category from your chart of accounts. And then, yeah, ideally you do want to put your information in date order. When you do your financial reports, it is date sensitive. So like, for example, if we go over to the left-hand side, all of those transactions were for the month of November. So you really wouldn't want to have October and December on here if you did a separate one for each month. Versus now you can also put all your November, then put your December, your January. But it is date sensitive is what I would say. You don't want to kind of have November, then throw in a December activity. You don't want to do that.
So question then, so should we then copy transactions and make a duplicate for each month and like?
I would recommend that, right? Yes. So, I would recommend you taking a look at it monthly, maybe even quarterly, and definitely annually. Because you want to keep your data so that you can use it as a tool to help you grow your business. So you want to compare your data. Some months we know are slower than others. And that's fine. But you should know the reason for that slowness. So someone that looks at your financial statement will probably be able to figure it out too, based on like if 1 month you have $500 in sale and the next month you have 5,000. There's a story behind that, and be prepared to explain it, especially if you're applying for a loan or something or a grant or whatnot. They want to know about those variances. They want to know, okay, you had it 500 there, then all of a sudden it reached to 5,000, which is a good thing if you're making money, you know, but it could be the opposite way where you can have $500 for expenses and then maybe expenses went up to 5,000. Right. So just be prepared to explain those differences from month to month, from year to year, from one period of time to another period of time, because that will tell a story. Me personally, this year, I didn't do too much in my garden because I injured my my ankle. So it is what it, you know, I did a lot less this year than last year, a whole lot. Right. But I gotta, you know, plan for it over the winter so I can get my strategy in for next year. So like I said, just keep in mind your financials is going to tell your story in so many words. Yeah. And this is great. So I'm just wondering, for this specific document and the way it's set up, if, you know, if the income statement is kind of the product that gives you the summary from a snapshot of a window based on the beginning and end date, in theory, couldn't the transactions, if the transactions are like, you know, if there's dates on all the transactions, and could you just have all of them in your transactions listed, and then your income statement, you say, you know, November 1st to November 30th, December 1st, you can just create income statements based on, you know, feeding off of that one document? Yeah, because what typically happens, and since we got time, we could talk about it. Typically what happens is that you have your income statement for a period of time. It'll be for several months, but you I encourage you to look at your data and review it, analyze it, talk with your partners, talk with your, you know, whoever's over your business, so that you have a point of reference. Because for example, We know that when we do our personal taxes from our job, that goes from January 1 through December 31st. Now, as your company, you don't have to have that same January through December. Your company can go from July to June. Your company can go from April to March.
Right.
It could be any 12-month period that's related to how you want to present it. It's a lot easier if we just keep it January to December. So in this scenario, there may have been some activity from January to October. It's just that for this presentation, we just wanted to look at October. So yeah, it will be a continuation for that particular period.
Okay.
If I haven't confused anyone, but yeah.
Can I just add one more thing to that conversation? Because this is really good. If you scroll down, Keto, the really important thing you want to know about is your net profit. This is going to answer the question: was I profitable this month or this year, as opposed to next year? So in this case, for this month, this business made a profit. But you could also see, where there may be times where you don't make a profit. And so I think that's the main question about a business is, am I making a profit? You know what I mean? So yeah. I just wanted to point out that line item there.
Yeah, like for example, when we start the season off, it's going to be deficits because of the fact our produce isn't ready yet.
Right.
So it's going to be situations where we have to front money to get this going and whatnot.
Right. And
this is our equity that we invested in our own company. So for the first, January to definitely probably about June, we're working in the negative, to be honest. Most of us, maybe not the ones of us that we are, doing installations, because, we're doing the installations when the weather breaks. But for growers, we're working in a deficit.
Right. And then
we're hoping to recoup those dollars.
Right. And that's a good example of, basically that's where the concept of the CSA or the community supported agriculture came about, is where, the ask is that basically people are investing in the company early in the season. So the farm can kind of be financially fluid. And then they basically, in return, people get the weekly box of produce. There's many different models of the CSA, but the kind of concept is people put money in on the early end with the promise of the produce that will come, and so that makes a lot of sense for the circumstance.
So if I could just talk a little bit more about that. So for CSA, then yeah, you're having a situation when you have this revenue that you really haven't honored the service or the good just yet. So you got to be careful about that, because you've made that commitment to provide those goods, but you are recognizing that revenue in advance.
Right. Okay. It feels like we haven't talked about the balance sheet yet. Should we move on to that, or?
Yeah. And so that's why we wanted to include the part about accounts receivable, because like I said, and so I think that was the one I think maybe it got taken out. I think we took it out, but this is basically a balance sheet, a very simple one. Basically it's just recognizing we have cash, and then we have some assets. We have some tools that's worth $500. So our total assets is $662. Then we basically, I can tell by being an accountant that, yeah, we bought that tool on credit. Our balance is $250, because I could tell by reading this. And then our equity is the difference, because we always saying assets equal liabilities plus equity. So my equity is $412. So that I balance out the 662 equal the 662 in assets.
Can we talk about assets for a second?
Sure.
So you were talking about tools. Like, how do we think about tools? Like it is something that could be so, like if things went south.
Like if it was a tractor, a small
Right.
tractor,
Right.
a lawnmower, if we had a
Right.
landscaping.
Okay, so let's talk about the tractor. So there's a tractor, I bought it brand new this year. It was $5,000. And but like if next year I decide that the business isn't working out and I want to sell it, and I think I could probably only get $4,000 for it, is it still $5,000 my assets, or how does that work? Is it like,
Well, when you have a fixed asset, you can, we know that cars depreciate.
right,
So the same thing with your fixed assets. Now, your fixed asset, a non-vehicle, they don't depreciate as much as a car does, because we all know that whole saying, you buy a car for $10,000, you drive it off the lot. Oh yeah, it lost 1,000 at least as soon as
right,
you drove it off the lot.
right,
Our fixed assets don't quite work that way. So they have a life that's a lot longer than a vehicle. Okay.
right.
So in the situation of the 5,000, maybe it depreciated maybe $500.
Uh-huh.
So therefore, if you sold it for 4,000, you basically took a little loss on that.
Right.
Okay. So that's not a good situation. So that's when you get into depreciation, and then you have to record the loss and everything.
So next year, then if I kept it, would it be still $5,000 as an asset, or $4,500 as an asset?
No, it won't be 5,000. Each year you're going to depreciate it a little bit each year.
Okay. And is there
So if
an
you have
equation for that, or
I'm sorry?
is there an equation for that, or how do you figure out what to depreciate?
Well, there's an equation. And so what you have to do, you have to say, okay, what's the estimated life of this piece of equipment? If it's something really big to small or whatever. And there's a reasonable rules in accounting that you can take like maybe 10 to 15 years of the life of that particular item.
Mm-hmm.
And if you differ from that, just be prepared to explain it. Mm-hmm. But the key thing you have to know is that when you have a fixed asset, there's a life that's associated with it. A useful life is what it's called. Mm-hmm. So that useful life, let's just go with something simple, the 5,000. Let's say, for instance, the useful life is 10 years. So you would basically say 5,000 divided by 10, so $500 per year.
Okay.
And you would depreciate that each year. So that 500 will be an expense to offset that value of the asset being less. Make sense?
Okay. Yes. Okay.
So for the sake of, being simple and just introducing this whole concept about accounting, we really didn't have it on the spreadsheet, but that's how you would basically handle that. There would be an account that's called accumulated depreciation, and it would capture that depreciation. But that is relevant as we get larger and as we buy these different assets and everything.
Right on.
So just something to kind of keep in mind, for sure. Okay. And that's basically referring to the using up of an asset. It's depreciation.
Okay.
Okay.
Okay, so next, should we go back to the slides, or are there any questions on this document, or I'm not be able to see this.
If I could just say this though, that when we take a look at those two basic documents, the income statement and the balance sheet, the income statement is the one that's going to be mostly used by us as farmers, as growers, as people in this industry and whatnot. So I would strongly suggest get very acquainted with that income statement, and then, get into the balance sheet though. But it's that income statement that you want to make sure you're capturing all of your expenses. So I know that sometimes we say though that, oh, that only costs $5, that only costs $10, don't worry about it. But if you're making substantial purchases of that $5 or $10 throughout the year, it can have a direct impact on your statements. So I say that to say, keep track of even things you may consider insignificant, immaterial. You might want to keep track of it. And it would be a good way. It's just like they say that, when you're spending your money, when you keep track of how much you spend each day personally, you'll be surprised when you start writing it down. You're like, wow, I know I spent that much money on that. It's the same way for a business. Those small purchases can make a difference. They can multiply before you know it, and they can have an impact.
Okay, so there's forgive me, I can't see the chat at the same time when I got the slides going. So there's some questions here. Ingrid, do you want to just? It looks like you just popped your hand up, and you did have.
Yeah,
yes,
yeah,
go,
sure.
Go ahead.
My question is, first of all, thanks for doing this. This is like complicated and scary on a good day. So
yes.
Thanks for putting this out here. There's so many questions, but is there an app that makes this tracking, like the basic everyday tracking, that makes that a little bit easier or more user friendly? Is there a recommendation of an app? And how do you feel about linking something to your bank account to make it a bit more easy and accurate? So
well, actually,
2 questions.
Yeah, actually, our next slide, we were going to talk about choosing a bookkeeping system, a record keeping system. And like I said, it can go for something basic, just pencil and paper and just having a notebook and keeping track of it. It can actually be that basic. But yeah, there are different apps available. One person that mentioned Zoho, there's QuickBooks. There was a few that I had when I was researching for this. I can't think of the name of them now, please forgive me. But if you just Google accounting software, you might want to just put in there farm accounting software. You're going to get a bunch of information that'll pop up. Some of them are inexpensive. Some of them offer discounts for the first 4 months I came across. Some of them were like $15, but maybe the normal rate was $30. I do think that the Google one that we had looked at would be probably, I think, a good starting point for people. I would, because that one was free of charge.
Yeah. Okay. Go free 99 about where I'm at.
Yeah, because when you start talking about the different apps and the fees and whatnot, it might kind of blow your budget. I knew it blew mine, so I was like, no, I'm gonna have to get something very basic. But I do think that the Excel spreadsheet that T had found, I thought it was really nice though. Because like I said, once you enter your data, you can get your income statement from that data that you entered, once you make the proper edits in terms of your chart of accounts and everything. And I do think that link is going to be provided too.
Yeah. It's in the chat, and looks like Jerome just put it back. Is that an app you put in there, Jerome? Or that's from the earlier? Okay. I'll just drop it in the chat again, just in case somebody missed it.
Yeah, it looks like that's the Farmer's Wallet.
Okay.
It's called Farmer's Wallet. Okay.
Yes, ma'am. On Google Play.
All right. Okay, so should we go back to the slides? Is there any more questions?
Keto Divine, I did want to say, I I had some experience like from a beginner stage on the QuickBooks app, and it became overwhelming. I would say that this spreadsheet that T gave us is more basic and accessible considering where a beginner is coming from. Because a lot of these apps, you think you're just doing one thing, and then before you know it, you're doing 20 different things, and you end up just losing what you were originally going there for. So, and technically, this is an app because T has already programmed in the formulas, or someone did. So it's going to do the calculation for you. And you can make this a home screen widget on your phone to where you could just tap it and bring it up like an app would as well.
Yeah. Good point.
Yeah, I like I said, I wasn't too fond of the apps that I took a look at. I do like the Google template. Okay, so
Hey,
if we can kind of move to the next screen, I just want to talk about some things that's relevant to when we say accounting. I briefly mentioned this as far as, keeping your books maybe for 1 month and then adding on the next month. So what happens is that means that you're closing the books, you're reconciling the books, your data, and that's important. It's the next screen though. So keep in mind though that when you take a look at your books, that if you have a partner, ideally it would be you and your partner looking at it. If you grow into maybe have a nonprofit, it would basically be you and your members of the board that may look at it. But it's something that you want to be aware of on a regular basis and everything. So I'm not trying to scare anyone, but it's something that you want to take serious, especially if your goal is to generate funds, to generate money. Okay. And like I said, just some terminology is called closing the books. So yeah, you'll close the books every month, but then of course you'll close the books for the entire year, whether that year goes from January, December, April, March, July, June, October, September. It's to your liking, that 12-month period. I recommend just using January to December as you get started, unless there's some overwhelming reason why you would change that. Okay, any questions here? Am I taking on clients? I like to say, I like to take on encouragement. So I'm one of those people that like math. So I'm telling you guys, please call me, reach out to me if you have a question. Yes, I am available.
Awesome. Thanks, Yvonne.
Okay.
We'll be sure and go back to your slide with your contact info at the end and put it in the chat.
Okay. So just to kind of recapping right now, we're talking about the income statement. We're talking about a balance sheet. And yeah, there's a third one that's called a cash flow statement. Now that one is a little trickier. So let me just tell you what it does. It's basically going to, the bottom line is cash, where you stand as far as what you got in your pocket, what you got in your checking account. So the cash flow statement is going to summarize your cash coming in and your cash going out, and then your ending balance. Your beginning balance, then cash coming in, that's your revenue. Cash going out, that's your expenses. And your payments that you made on your loan, if you have a loan. And then the bottom line is your ending balance. That's the cash flow statement. I've summarized it like as if it's simple, but it's not always that simple, but that's the data that is capturing though. Okay. So again, we want to review our information monthly, might even want to take a look at it quarterly. And then of course, definitely annually. So what happens though, like I think I alluded to this earlier, if you have entrepreneur, if you're just a one-person operation, it's going to be you reviewing it, you taking advantage of it, you sharing it with your funding sources, whether it be a grant opportunity or it could be just applying for a loan. If you have a partnership, you and your partner are reviewing it. If you have grown into a nonprofit, I think we had a little bit of information on nonprofits last week. So if you have a nonprofit, usually you're going to have your finance committee, and they're going to break apart all these reports and whatnot, analyze, ask you questions. And then, of course, not part of this discussion, but in terms of, I'm just going to throw it out there, it'll also help you do your budget for the next year. So keep that in mind also. I did see a question in the chat, it popped up. Can the cash flow be added to the Google Sheets? Yes, it can. We have to modify it a little bit though, because like I said, it's taking a look at your beginning cash balance. So it's going to take a look at that balance sheet amount, and then it's going to include your revenue, your cash coming in. So we have to distinguish between a cash transaction versus something that's on account. And that's why I was saying it can get kind of tricky and everything.
Yes. So my question was asked that the link that you all share with us, is there a way that that cash flow sheet can be added to that Google link that you share with us, so we have that all in one, as opposed to us trying to create it ourselves?
Well, that's what I'm saying. They have to be modified. We will have to take a look at some of the information, right?
Okay. Okay. Then my other question is, Yvonne, is why do grants have to be included in our overall accounting practices? And then we're responsible to pay taxes on the grant money as well?
No. The reason why we put grants on there was only because of the fact sometimes if you apply for a grant, they want to see your financial statements. And basically they want to see it to make sure you're legitimate. That's the bottom line. They want to see, and then they also want to see how you're spending the money. For example, let me kind of just, okay, if you have a financial statement and a lot of your information is on salary, but you are garden, something's not right. That story isn't right. So they're just going to take a look at your expenses to see your flow. And believe me, they will, you can look, I can look at an income statement and kind of pick up on some key things right away. Just dollar amount, if you look at the title of you have to even be kind of particular how you classify your different line items. And when I say line items, I mean that part where we talked about chart of accounts. If you say that you're a firm and you have like on there office supplies is like real high, that doesn't connect. That doesn't connect at all. But I'm just throwing you a what if. I'm sure it doesn't happen, but if you can kind of just take the comment I make and think of some other line items that would not normally flow under the kind of companies that we're talking about. But people do this, they do it. And we got some information at the tail end of this thing, and we also want to close by saying we're not there yet, that unfortunately people do commit fraud when they do their income statement, balance sheets, or cash flow. It could be erroneous information. And so that's why we're saying the oversight, you do want to know what your numbers have and what they represent. But then when you start expanding to a partnership, to a nonprofit, your oversight responsibilities are greater. It's more accountability. I mean, you have a responsibility on the individual level. We have to. We say that we grow produce without pesticides and stuff. I mean, I think that's our signature statement. So if someone is selling produce using pesticide, that's a big no-no. That would not be acceptable. So that's what I'm saying. The financial part of it is important too, though. We want to make sure that we're presenting accurate information. But people have been guilty of, and I'm not just saying on this level in terms of farming and agriculture and whatnot, but I'm talking about on bigger scale, people have committed fraud and reported bad information on their income statements and stuff.
Can I just add to that?
Oh, sorry.
I'm sorry. I just wanted to add, because I like, that's my job. I manage the grants at my job. But like, if you get into like reimbursable grants where they don't give you the money up front and you have to, like, they give it to you after it's spent, having that in the chart of accounts is extremely important, because it's just like another, an extra step to kind of track what you're doing, especially when the grants are reimbursable.
Great point. Thanks for bringing that up.
So, but that one question, that last one, did I answer your question though? I just want to make sure I answered all aspects of your question.
So the other part was, what I wanted to get clear is that when we take our balance sheet and now are getting ready to prepare our taxes, and I know that's the next class, will that grant money that we were allocated be part of what we're taking over and then have to pay tax on that grant money?
Typically, you don't pay taxes on the grant money, but what happens is that if your grant is for $2,000, you should have the associated expenses of $2,000. See, when you get a grant, I would say one of the most important things is make sure you spend those funds as dictated by that particular grant. Mm-hmm. So you're going to show the revenue of X amount, but then you're going to show the expenses of X amount. So if you got a grant for $2,000, ideally you will have expenses of $2,000 or very close to it, or maybe a little bit more than that. But that's the key thing. You have to make sure you spend those funds accordingly. That is a must.
And now, then, go ahead.
I'm sorry.
Because the questions are coming up. So as far as travel, so say that you have to travel to go and purchase the supplies, or you have to go and travel to make the deliveries, or you have to travel to go to the farmer's market. How does that go into our transaction sheet or our expense sheet?
Okay, you're going to have a line that's called mileage. And I'm glad you brought that up. This is kind of like one of those items that I was saying that you may think is small, but over time it could be large. I do think that on one of these, there was a line item that was mileage. Maybe it was on another form, but yeah, mileage is a legitimate expense. And if I can just add this tip on there, whatever the government renews their mileage rate every year, every January. It comes out like in maybe December. Whatever that mileage rate that they have, I would use that as my expense amount.
It's like point.
So whatever your miles are 10, because I think it's currently about 58 cents per mile.
Right.
But it may be a little higher because of the increase in the gas amount. You know, the gas is so much more. So let's say, for instance, 60 cents. So it's 60 cents per mile. I would capture that data. That's an expense. And like I said, you never thought it was. You may not think of it because you're saying, oh, okay, that's not really gardening. But case in point, like you said, though, you had to deliver something to something. So yeah, that's a legitimate expense, but you got to track it appropriately. So what's acceptable as far as tracking it is that you can just do MapQuest, and then you just put your beginning and ending spots to give you the mileage, and that's what your mileage is.
Yeah. Thank you for answering my questions. This was very informative and educational. Thank you so much.
Oh, you're welcome. I'm glad it was helpful.
I'll just add a little side note to that last comment, conversation about mileage, and something that I do for my work. And oftentimes it's hard to remember, but like I use my calendar to help me keep track of, because I'm not always traveling for work related things. So it's like,
Mhm.
I'll make sure I put on my calendar, travel to X job, travel to Bond's Garden, travel to whatever. And then when I'm ready to go do my mileage, then I'll, go through my calendar and look for travel or look for, for that keyword. And that will help me, kind of track down instead of trying to do it in real time. But that's one way of kind of keeping track of all that stuff.
Yeah,
Thanks,
that's a
Keto.
good idea. Yep.
Can I just want to add one thing on that one slide when we're talking about oversight a little bit, and I know we're going to get into a little bit more, but a lot of us are, either forming nonprofits or are asked to join the board of a nonprofit, and I just wanted to underscore the fact that, like, as your board of your nonprofit, whether you start a nonprofit and you have a board or you're on the board should be privy to these financial statements. And that is what is going to help us to get out of like these kind of sticky situations where there's, some mismanagement of funds. So the board is supposed to be the board is actually legally bound to provide financial support to financial oversight to an organization. So if you're on a board, that is like actually your job, and you can be held liable for financial misconduct, at the organization. And if you have a nonprofit and you're interacting with your board, you should always be sharing your financials with your board on a monthly or quarterly basis. So I just wanted to say that out loud because it's on my mind a lot in the different spaces that I'm in.
Right on.
Yeah, that is so important. Again, that's that oversight responsibility. As nonprofits get larger, they do have what's called directors and officers insurance coverage for that particular protection. There are some people who may not serve on your board unless you have that coverage because they don't want to be personally liable. I've seen that situation. So these are all good tips to keep in mind. And like I said, they may not be appropriate for you right at this level, but as you grow, definitely food for thought for you as you make some plans. Want to go to the next slide, Keto?
This is just the spreadsheet we have been looking at.
Right. Mm-hmm.
Interpreting financial statements.
Okay. So, yeah, keeping your records for up to 3 years. Sometimes it could actually be longer. Okay. But this is how far back the IRS. I have seen isolated situations where it could have gone back further because of the situation in terms of the mismanagement of dollars. I know this says keep transactions over 75. I would suggest keeping transactions for anything because, like I said, those small things, when we're on the smaller scale, they can add up. So I would say, though, and just kind of reinforcement, we had talked about how you want to keep your separate bank account. You want to keep a separate charge. Keeping a separate charge is always good because if you spend cash, if you charge, you'll have that little added paper trail for you. And then if you like my shopping, sometimes if you have that receipt, that paper receipt, sometimes that ink kind of wears off. And it's like, oh my goodness, I can't take this item back because they're not going to let me take it back because, they can't pick it up. So that's something to kind of keep in mind. So when we talk about documents, we are talking about invoices, receipts, bank statements. We're talking about all of that. That's that paper trail that we're trying to keep. So you can have a paper filing system. Of course, you can have it on your computer hard drive, or of course in the cloud. But I remember when, how old was I? How young was I? 18. And the lady said, CYA, Vaughn, cover your, and you know what that A is. So, CYA and documentation has been a part of my life for a long time. It just kind of just goes with it's just a normal, how can I put it? It's a normal thing for me, versus being abnormal, but keeping a paper trail is important.
You
Any
know,
questions at this time? Any or comments or anything or
I have a
experiences?
comment. T, are you there? Can you speak up? So, well, I'm not sure if this is going to apply exactly to everybody, but we do have, so another thing that we use at Keep Growing Detroit is we have like basically a cash card amount of cash card account. So it's like for employees to be able to make purchases for this and that for work related stuff. And one of the cool things I like about it is you can connect it to all your accounting. So basically, instead of me having to keep track of the receipts every time and like you throw it in your pocket, it gets crumbled up, whatever, like where did that receipt go? Immediately, like right after I do a transaction with my cash card, immediately it shows up in it's called PEX, in my PEX account. And then I can take a picture of the receipt and then I can put the category on it even. And so that helps with our whole accounting process internally. But that receipt is captured immediately, which is a really nice feature. And I'm not sure how applicable. I'm not like sure what the fee, how like what we pay for PEX or how, like if that makes sense for other folks on the small scale. But I mean, I'm sure there's other tools out there, but like even just if you buy something, take a picture of that receipt like right away. And that's an easy way to like just keep track of it instead of you getting lost in the fray, which is very common. People always talk about that pile of receipts or their back pocket or whatever.
Yeah, it's so true. It happens. They will wear out. So we can go to the next screen. We don't have that, so let's go. Okay, we did talk about accounts receivable, the pros and cons. But one of the things we do want to emphasize, since we do have time, is that if you do have a situation where someone is going to pay you later, strongly think about sending out that invoice. That invoice will support you having to get those funds from that person at a later date. So we have some guidelines, some tips on what that invoice should include. Okay, so and that's on the next page, if I'm not mistaken. Want to make sure that the word invoice is clearly displayed. It's usually like at the top, at the center, right below, or well, actually, maybe right below your logo with your name and address and everything. And then, of course, you're going to have your customer full name and address, which usually is below that on the left side. You want to have that invoice date, the payment due date. Yes, you do want to have a unique invoice number. I've seen situations where someone has used the date as the invoice number. If it works for you, fine. But you do want to have a unique number. Yes, and you do want to have that description of the product, the quantity, the price. You have to determine if it's relevant to put the delivery date on there, and of course, the total amount due. These are some key things you want to have on that invoice. So, like I said, if it's a situation at a later date where you find they don't pay, if you have to have a potential lawsuit or whatever, this will be that document that I'm sure any judge would say, well, was there a clear understanding that, that this was a sale? So that's something you might want to consider. There are some invoices apps available. Some of them are free too. Square or PayPal has them. And I think Cash App, you can send someone an invoice too. So just kind of food for thought to think about. We realize though that having customers on account is not going to be a whole lot, but it may be, because we may grow to that size where it is okay. But just something to kind of keep in mind though. Next screen. Did you get that sample invoice by chance from T?
I did
Keto?
not. I did not.
Okay. What we said we were going to do because of.
I'm sure T's. I know T's been working on a few tools, and T had something come up this evening, so she had to take care of something. So, but what we'll definitely do some follow up from the class. So something like this, examples of invoices, I'm sure we can include.
Yeah, thanks, Keto, because that's what I was going to say. Some of these things we're going to just provide later as we dealt with the emergency and kind of go from there. So we talked about, I don't think we talked about this particular area just yet, but this may be part of your business. You may have an opportunity to get a grant. And you may be in a situation where the funder is saying, oh, you're not a 501c3 just yet, or you're a small company, you really don't have the financial statements and whatnot. However, they still may be interested in providing you with this grant. And typically what happens is that they'll say to you, okay, if you can have a fiduciary, we'll be more than happy to provide you this grant. So in that situation, a fiduciary would normally be an established 501c3 organization. And so they have audited financial statements, and they have a good track record of handling money and funds and whatnot. So I personally went through this. The fiduciary actually charged me a 10% fee for my grant was X amount of money. Whatever that amount was, they earned 10% on it. But the learning thing that I got from that particular situation is that, yes, this 501c3 organization was well established. But what happened is that when I had to apply for my grant through the water board, I didn't have all my documents and whatnot. So what I learned is that even though I had this fiduciary providing the services and whatnot, it would have been to my advantage to have made the copies as we went along, because it was like 2 years later, the water board was asking for these documents and whatnot. So they had to kind of dig a little deeper. But so even if you use a fiduciary, I highly recommend that you still keep track of that you, at the point in time that they may write or pay for expenses, that you ask for a copy at that point in time so that you have it at a later date in case you need it and everything else. So, but that fiduciary will be responsible for handling all the tracking and bookkeeping for that particular grant. And so with that being said, they'll get a check for their 10%. They'll get payment for the entire grant. They're going to withdraw their 10% or whatever the fee there is, because you're going to have a fiduciary contract between all three parties. Those three parties being the funding source, you, and then the fiduciary. There's going to be a 3-party agreement that's established with the understanding that the fiduciary will handle the record keeping for it and everything. So those just something to kind of keep in mind. That's an opportunity for you. So like I said, the tip is that even though it's not going to be part of your record keeping, that you just ask for copies from your fiduciary so that you have like your own little separate one just in case and everything. So is anyone looking forward to applying for a grant or anything this year or next year by chance?
Absolutely.
Just curious.
Absolutely.
Okay, then. So kind of just keep that in mind as an opportunity for you. So the next slide we kind of touched on already a little bit. in terms of the fact that at all levels, you want to have that oversight, you want to have that internal control. And that internal control is good for you as a single owner, as your nonprofit or your partnership, or your corporation. Some of us may just decide to be a corporation. But the record keeping is still, the basic record keeping is still going to be vital. That does not change at all, no matter what level you're at. And I think we may have, I think this pretty much wraps up our topic on Papertrail.
All right. So
Unless there's any
going back to the
questions.
beginning, right? So making sure everybody sees if you're if you have ongoing questions, Yvonne has offered to be a resource, and so here's her contact information. So you can make note of that. I'm going to stop. Actually,
You're welcome.
all right, I'm going to
You
stop
guys are welcome.
sharing now. Okay, so we have a little time left. Just kind of opening up the floor for any questions you may have from the spawn. Anything that maybe was not quite clear, or you wanted a little more detail on, or something that's kind of been hanging over your head thinking about accounting related stuff.
You guys are so welcome. I appreciate the opportunity to share with you guys. And actually, this is a good time to kind of think about what we've talked about. I mean, obviously, for you guys to join the tonight's session, you guys are serious about taking that next step. So with the actual growing season winding down, and as we look at December and January, it's a good time to kind of put things in place. So next year will work out even better.
I have a question, Divine. So it may be a little more extensive. However, what I want to understand is you, as a startup, say that you go to selling your produce online. And so how do you collect that expense for your internet? Usage of your internet to be able to manage the online transactions and everything?
Mm-hmm. So are you saying that you're going to market it and people can pay you by charge card?
What I'm saying is that I have a website where people can go and purchase the produce. However, I have to use my internet to be able to receive those transactions and interact with the customers. So how do I create that as an expense on my line item sheet? Because we talked about mileage, but we didn't talk about internet usage.
Oh, so whatever. So are you saying that your monthly fee for the internet, or the fee, like for example, I've seen it where if you accept charges, there's like a fee that's assessed, like if it's like $100, you might get assessed $6 for that fee to make that charge. You talking about that?
So you got two things. So you got the credit card transaction fee, which PayPal will take a certain amount of money off for that transaction, but you also have the actual utility fee for having internet service. So just like how you use your home for your office, but you also have the internet, which is part of being able to manage that. How do you list that as an expense? Is it internet? Yeah.
That would be like you can have a line item that's called communication line.
Okay.
And then, like, for example, if it's like $45 a month, then you're going to charge $45 a month. You're going to include $45 per month for that fee. And then for that fee, that's like for that charge transaction, you can keep track of that separate too, or you could tag it on to your actual produce fee and you will have that little extra added to it.
And so would the cell phone as well be included in the communication
Yes,
fee also?
yes, you have, those are all legitimate expenses to do business. Yes.
Thank you.
Now where it gets a little complicated is that when you say you use your cell phone, are you using it for personal too? Or do you have a separate cell phone just for the business?
A separate line for the business.
That's even better, 100% expense. Yep.
And so with that separate line for the business, does it have to be in the business name or can it still be in my name?
I do think it can be in your name, but just keep it separate and it will be 100% write-off.
Okay.
But you want to make it clear that whoever does your taxes too, though. That's just like, okay, so let me kind of deviate just a little bit. Sometimes people have a business and they don't have a separate brick and mortar as far as where their business is located. Their business could be a room in their home. There could be an office in their home. So in that regard, you just take a part of you have to break up your home and maybe get the square footage for that office. And then whatever your fees are for the month, then that percentage is an office expense. So this is why I was saying that when you keep track of your expenses, really think about it, because sometimes there's more to it than we think. And in the scenario that you're giving, those are all legitimate business expenses that you want to include. You don't want to forget about those.
And so you said for the office space that you're using, you want to get the square footage of the space. And then how do you come up with the equation? Is it that, how do you come up with the equation?
Sure. You take your total square footage of your home, and then you take the square footage of that area that you're using for your office. And whatever percentage that is, that's the percentage you could take of your household expenses.
Okay.
Now that's a very simple way to do it, but yeah. But yeah, you take the square footage and then, because like for example, if your home is 2,000 square feet and then your office area is 150, so 150 divided by 2,000.
Oh, okay. Okay, I got it. Thank you. I appreciate that. I needed that.
Yeah. Yeah, because like I said, everyone doesn't have a brick and mortar for their office space. And that is acceptable. That's what a lot of people are doing, especially since COVID. They are taking the square footage of their home, of their office in their home, and that's office expense.
Right. Okay, so there's a question in the chat. If you try and write a lot of line items off, do you attract the IRS's attention more?
Yes and no, because if you have like for example, with the businesses, the office that we were just talking about, if you have your square footage, your total square footage, and you have your specs for your office and stuff, that's legitimate. The key thing I would recommend is you have your documentation. That's the key thing. You can't just say, oh, my office is big, so I'm going to use 25%, and you can't do stuff like that. Just have your paperwork where you've taken the time to do the calculation.
Right.
And have that, so when they do audit you, if they audit you, you will have that, and you're not trying to kind of backtrack and go, oh, shoots, I'm up a creek.
Yeah.
So you have that information before you. And then when you have in the scenario that we're talking about, if you have your separate phone line, then you have that bill that's separate. You have it with your business records. So just be prepared, if anything, is what I'm saying. We have this, at my job, we have this thing that, every year we have the annual audit. And most times people don't like audits. They're like, oh gosh, the audit's here. I kind of just go with the flow when it comes to audit time. Because, and I say that because of the fact every day we're in the mindset for the audit. So we take care of things that we need to take care of throughout the year so that when they do come in, I'm not sitting over here going, oh, I hope they don't pull that invoice or because that one don't have the right paperwork. No, every paperwork should have the proper information on it, the proper approval, the proper amount, the whole shebang. And it just makes life easier.
Yeah. Okay. Lots of good information here. Any other questions?
But you know, in terms of the tax part of it, that's going to go into a little bit more detail next week. And I'm not sure who's doing that particular class, but I'm sure they're going to echo what I'm saying, that documentation is so important. I've never met an tax accountant who never said that, who disagreed with that.
Yeah.
But at the same time, if I could say this very gently, and I hope you guys understand where I'm coming from, there is this saying too, though, that sometimes you can have too much information. There's sometimes you could talk too much if you were to have an audit. You don't want to keep running your mouth about, no, because that could actually open up another can of worms. If they ask you for the copy for this, give them the copy for this, not that. Right. Don't give them more than what they ask for. Just give them that's kind of like a normal accounting rule of thumb too. Just go with the basics.
Right on. Okay.
Okay.
How's everybody doing?
Awesome.
All right.
So we're going to do it next year, guys. Yes, we are.
All right.
Yeah.
Yes, for sure. For sure. You know, this is a great way to kind of breathe life into, you know, something that can be overwhelming to folks. It's just to have a conversation about it. This has been really helpful. I appreciate you taking the time.
I'm glad it has been.
Okay, well, if I still got a few more minutes, if anybody had any, last minute questions, otherwise we can wrap it up for the evening. Okay. Well, with that, then, I just want to say thanks again, Yvonne. Really appreciate you putting the energy in and putting this together. It was really clear. We will definitely be sharing the slides and the reference materials we spoke about tonight. And you can listen to or watch this video again on the YouTube channel, the Keep Growing Detroit YouTube channel. It will be back up. It'll be up there within a week or so. And with that, we can sign off for the night and have a great evening, everybody. We'll talk to you soon.
Take care, everyone.
Good night, everybody.
Good night.